Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shail Patnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's a muted day of trade. You can see 23,655 right now on the Nifty, 50 points lower, although we are off the lowest point of the day. 49,850 now for the Nifty Bank, 340 points of a cut there, 0.6% of a loss. Most of the sectors are still hovering lower, barring the oil and gas sector. That's hovering 1.7% higher, definitely bucking the trend. FMCG and infra, some gains can be seen on these indices, but rest of the sectors and pockets have all slipped, especially the broader markets that are now seeing deeper cuts. 1.5% of a loss for the small caps. Mid caps are down by over a percent. On the top moving front, in the last hour of trade, you have Maruti Suzuki driving in the fastest lane. Top mover on the Nifty, a percent higher. Bajaj Finserv, Bharti Airtel, TCS and Axis Bank are some of those top gainers as far as the Nifty is concerned. On the lower end, you have Apollo Hospitals that's giving up some of the last few days' gains, 3.5% lower for this one. Trent is down now by 3% at 6,666. Shriram Finance, Bajaj Auto, Ultratech Cement are some of the other top losers at this point in time. Good afternoon, Shail.
Good afternoon, ladies and gentlemen. Let's pay attention on the Nifty. There has been a dramatic 150-point uptick on the index from the day's low. What you see in front of you is 23,675, and most likely a lot of selling pressure or call writing will now come in from the 23,700 call writers. And what's really interesting is that when you see the day's low, it was almost close to 23,500, 23,496 to be precise. From then on, about 200 points up, and you have 23,700, but then selling pressure coming back into the market. There are points of outperformance, especially from the extremely beaten down NBFC space, which ahead of the budget is now seeing sure signs of buying. As far as markets are concerned, look at Spandana Spurti, now 18% higher. 564 crores worth of shares have been traded on Spandana, and this is at 474. This is not alone. Credit Axis Grameen, 1051, 15% higher. You have similar gains coming into Fusion Finance, 8.6% higher, 192. You have a green tick on L&T Finance and many other cash counters such as Indostar Finance from the NBFC space, which were beaten black and blue over the last 12 months, but are now showing signs of perhaps bottoming out. Whether it's a flash in the pan, only time will tell, but these are interesting statistics to look into. Today's outperformer being the NBFC pack. Within the new highs, you have two hospital chains we've been talking about since morning. Max Health, 1205, KIMS, which is Krishna Institute of Medical Sciences, 1.1% higher, 656, and of course you have Apar Industries at almost 11,000. Intraday high was 11,779, a fresh record, and Anantraj Industries. This is a real estate play out of Delhi. The high for today is almost 948. What we'll do is we'll have a conversation with Mr. Sharad Avasthi, Head of Research for the Private Client Group at Calcutta-based Smith Securities. Namaste, Sharadji. Warm welcome to you in 2025, and a very happy new year to all clients at Smiths. How are you watching sentiment on Dalal Street? On a daily basis, we are subtracting 50, 100 points or thereabouts from the Nifty. So it's a death by 1,000 cuts rather than, just cutting the entire neck off. What is your prognosis of the sentiment that we are now facing in the market?
Thank you, sir. Happy New Year to you as well. We think that this is probably, a mix of many things that have happened. One primary thing that has been out of sync has been the FPI outflows. And I think that is something that is bothering us the most in terms of, cuts on a daily basis. Domestic inflows continue to be smart only, and we don't think that it is going to slow down anytime soon. But yeah, international flows, I think they would be dependent on interest rates globally, how they behave. That would result in the dollar probably weakening. and that would result in flows returning to developing or developing markets or emerging markets. So that is where India should stand. So basically, a rate cut is something which could result in FPI inflows. Last month, we have seen one of the highest outflows probably. So after that, I don't think the speed can continue at that rate. Generally, if you look at it over the last 8-10 years, after a big month of outflows, usually the outflows seem to peter down. And if the interest rate scenario reverses over the next, 2-3 months with more clarity on US data, etc., and the clarity is there regarding interest rates, I think flows should come back. The other thing that's been doing the rounds and creating ruckus around the world is inflation. And I think it's largely now should be under control at the domestic level, largely because of, tomato, onion, potato prices and some bit of gold and the precious metal prices. 33% of the inflation was roughly out of that. So I think those all prices, all tomato, onion and potato prices should come down as the fresh supplies come in. So I think that part of the inflation should come down. And even on gold and silver, I don't think you're looking at a very aggressive price increase this year. Maybe if a manufacturing related improvement happens, silver gains out of it, but gold I don't think will contribute majorly. So I think inflation for the domestic side, that would help us. On the international side, if you look at US inflation today, most of it is partly because of rentals, etc. And I think gradually that should come down because it has reached more or less the high levels that we've seen over the last 4 or 5 years. So gradually, if that starts petering down in terms of the rental inflation that we have seen there, I think inflation in the US would also come down. Food inflation has come down globally. In case the Red Sea crisis, etc., just dies down naturally over the next 3-4 months, some major events happen. Then probably fertilizers or logistic costs, which have been adding to inflation, I think they would also subsist. So I think most of the tailwinds for inflation seem to be going down over the next 3 to 6 months. So both inflation and interest rates should be very supportive for global economies as well as the Indian economy, and that should support FPI inflows as well. And the final, good event could be that the quarterly numbers this time around could be more second half heavy, and most of it would bundle down into Q3 and Q4. Though some of the commentaries that have come out till now have not been very encouraging even for Q3. But I still believe that probably the numbers will look much better in some cases. Coal prices have come down, so that should help. So I think in total, what I'm looking at is some margin improvement for most of the companies over the next 2 quarters. And I think finally the advances deposits should also improve in the next quarter also, which is an aberration. Generally, Q4 isn't that robust. Q1 is even slower. But I think this time around it could be very different. And I think budget could be a very big event that we might look at after a hiatus of around 4 or 5 years. Maybe it's a budget that might have something that we can talk about.
Very good afternoon to you, Sharji. Good to have you with us. Tell us, what do you anticipate from the upcoming earnings of IT sector particularly? Are you looking at any key stock ahead of the earnings? Where do you find promise coming in from the IT pack?
I think after this recent smart run-up that we have already seen in terms of quarterly numbers, this will be most probably an off kind of quarter because of so many holidays that are there, furloughs basically. So I think in terms of numbers, you can't expect much to happen in most of the IT stocks, barring maybe an HCL Tech maybe. But I think largely, I think at these valuations, they are fairly to squarely valued. The primary thing that we would have an eye out is basically how much improvement happens to the forward numbers that they look at. In terms of valuation, I don't think across the board I have any IT stock that I would be very gung-ho. Maybe a Scient could be one name where the valuations are a bit favorable, or a BSoft. But rest of it, I think, is fairly valued. That's not that it's offering you a very good bargain. And the focus we are putting on is basically on the forward commentary that these companies come out with.
Sharaji, when you look at the broader market, there is this feeling that the NBFC space has bottomed out, and there seems to be some hope that in the first week of Feb, whether it's the national budget or the RBI credit policy, you might see some signs that the liquidity session that's being crushed will seem to be restored, some steps being taken there. Within this beaten down space, do you have any favorites? Look at how over the past 2 days, stocks that have been beaten out of recognition are moving, in particular credit access Grameen.
Yeah, so this is a space I've been bullish about, whether it's the microfinance space or the small finance banks. I think they were all beaten out of shape, trading at what on an average 0.8, 0.9 times price to book. They had issues, obviously. Fusion particularly had issues, as we have had a talk about it on your show also. Spandana probably have also recommended a few times, but the correction was so severe that it could unnerve you whether your thought process is right or not. But that's markets for you. Some exaggeration on the downside, on the upside is very normal behavior. But now, yes, I think that probably the view is coming back to the fact that most probably it has bottomed out. And microfinance and MSME as a sector is very important. Even if you look at the IndusInd Bank, sale of problematic assets, the size wasn't big enough. So after that, we saw some improvement there also. So I think if you want to play out this theme of microfinance and MSME and the improvement there, IndusInd could be a good frontline name to bet on. On the smaller side, I think Fusion is a very good name that I'm betting on. Spandana Spurti, even after this run up, I think valuations are still comfortable. Once the tide turns, say over the next 3, 6, 9 months, the re-rating cycle could be very strong. Credit access Grameen also, or even something like a 5 star, but I think there the valuations are a bit on the higher side, so maybe the valuation uptick will not be as steep as probably in a Fusion or a Spandana Spurti, or even for an IndusInd Bank, but still they will do very well. I think they're quality names, diversified books, so big write-offs. I mean, as a whole culp, I'm not expecting. But if a region does fall into problem, obviously microfinance has that kind of behavioral attire that you will have that problem. But I don't think that it will turn out to be very big. And I think this is a learning curve that they have had for the last, especially post-COVID until now. It's been a very harsh learning curve, and I think they will come out much stronger from here on, and that they'll mature as an industry and as companies. And I think that is a very essential thing for the country. Like urban areas, banking is roughly overdone. I think it is the hinterland and the tier 2, tier 3 cities that need it more, and even the MSME segment. So I think these are quintessentials for the economy, and they are not going out anytime soon. And valuations are attractive. I think maybe my top bet would be Spandana Spurti and Fusion. And if you want to go with a larger name, maybe an IndusInd Bank for around 1500 kind of targets.
Okay, got that. So that's as far as the banking and the finance names are concerned. Sharat ji, if you could also help us understand from the FMCG pack, one, what is your outlook on this sector? And secondly, on the ITC counter, how are you really looking at it, especially when we are right ahead of the demerged entity to be listed soon as well? And what are you advising clients on ITC right now?
See, firstly, across the board, I think FMCG, even though they haven't done much, and there's been a lot of hypernuclear about FMCG not doing anything, but it's again something that where most probably overvaluation took a beating on it. Most of them were trading at 60, 70 times, and over the last 1.5 years, input price pressures, slow demand, rural as well as urban has hit them hard. Most of them will continue to grow at 8 to 10%. I think the rural demand is coming back. Even urban demand should make a comeback. So it is not as strong as it would have been expected to, but some of the retail data from DMart, etc., do point to strong upturn. Across the board, most of the quarterly updates that we have received, even for consumer goods companies or FMCG companies, I think it's not very encouraging. But I would wait for the final numbers to come out. One thing that could help them over the next quarter or so is probably lower input prices, because in the last quarter, most probably palm oil prices had gone up a bit, so that would have caused a bit of problem for most of them, particularly the soap etc. manufacturers. So on balance, I think across the board FMCG, I would not be very bullish even at these valuations. It's not a very big bargain hunt, but yeah, you could gradually start nibbling into it. I think from here on to for it to be even worse, I think there is very low probability that you would have more down headwinds for these companies. So most probably will not have many negative developments happening for these companies. Gradually, you would see improvements only. But across the board, if I have to look at, I think maybe a Dabur is good because of the product profile that it has. Uh, Honasa, I've been telling you, I think as a differentiator, I think that could be a very good bet to bet on within the space. And regarding ITC, I think, but the fair valuation would be around what, 500 rupees. So I think still there is some upside, around 10% upside. The dividend yields are still decent. So I think one should continue to hold on to ITC. I think post the hotel demerger, the balance sheet is probably a bit lighter because that's an asset-heavy model. And I think they could divert that into the main core FMCG business that they want to scale up. And the product profiling, etc., new launches, etc., have been very good. Whether it's the ready-to-eat market or the healthier food market, I think all these catch up along with quick commerce. They could further improve penetration. So I think you continue to hold ITC for targets of around 500 in a year. And if you want to bet on something outright, I think Dabur for around 600 looks like a good bet. But rest of it, I think have a staggered approach to accumulate it, say 25% every time it falls by around 2-3%. So over the next 10-12% correction in most FMCG stocks that you like, the front lines could be, Aliva, Nestle, or anything that you like. The second line could be something like an Imami, etc. So you could stagger your approach there, but I don't think that valuations leave scope to just jump into buy across the board right now. But maybe ITC for around 500, Dabur for around 600 might be good ideas to look at.
Right. We'll take a detour into the markets now. The Nifty is back in the green. 23,700 is now again under the bull's control. Remember, the intraday high was at the first 5 minutes today, somewhere like 23,750. Then a downdraft all the way down to 23,500, and here we are back up. The primary contributor today is Reliance. It's 2.2% higher, and what is really interesting is that with this uptick you see a very strong volume action coming into Reliance for the last 2 days. And not only is the delivery higher than the 5-day average, but you see very strong action coming into Reliance after maybe 4 + 2, 6 months of consistent falling. So this is something to be looked into. The other contributory factor in the markets today, of course, is the NBFC theme. We've already discussed that. Let's look at the other gainers. ITC is contributing 23 points to Nifty. Reliance is contributing 26 points. TCS 15 points. Remember, we are a day ahead of TCS. It reports its third quarter tomorrow. Axis and ONGC 7 points each. What is pulling the Nifty down? Well, it's the two banks on the private side. HDFC Bank pulling it down by 20 points and ICICI Bank pulling down by 30 points. Any volume buzzers that we should be asking? Sharadji, of course, we've discussed credit and we've discussed this is an interesting one. Some consistent buying in Concord Biotech from the Pharma side, Sharadji. 3.4% higher, and now around 2250. Is this a stock that you track? Your views on Concord Bio?
I think the last we tracked it around the IPO, but recent numbers I would not have a hang of how it is trading at what valuations. So it's better that I don't recommend anything.
Okay, Sharadji, also wanted to get a sense on Reliance Industries, particularly 2% higher today. Is it finally getting its mojo back? Do you think 2025 will be a year where finally we'll see some outperformance coming in on the back of 2024 when we had seen negative returns for RIL?
Yeah, I think at these valuations we are looking at it very positively. I think this is a frontline counter that you should be, overweight at these valuations. The geo listing most probably could be a trigger, which adds on to some, momentum around the stock. And I think in valuation terms, we are looking at targets of 1650, 1700 on the stock. So that leaves a decent upside for a large cap stock. And I think one should be overweight on it. And there's no reason why FY25 should not be a stellar year in terms of returns from Reliance. The Geo thing could be the momentum trigger, but I think even beyond that, the petchem margins, etc., should remain steady. I don't see any kind of big nervousness there. And the rest of the businesses are also doing fine. And what they do with the renewable part of the business, like I believe they announced something regarding CBG. With more announcements coming in on the renewable side, I think that could offer some further upside. But even if we consider a status quo kind of situation, the type of commitments that they have made to the renewable energy space, telecom, retail is growing at a decent pace. So I think a lot of integration benefits can also come into them, and it's like a broader funnel ready of distributed distribution funnel ready, and you just need to funnel down the products through that. So I think it's a unique position, and execution obviously is something that we are looking at. There is a bit of overhang regarding the debt and the interest payments, but I think if we enter a lower interest cycle, that would further add to it. So I'm thinking, yeah, you should continue to hold on, even buy at current levels for targets of around 1650, 1700.
Sharaji, what do you make of this US 10-year yield? Now the common consensus is that we are headed for 5%. This has practically destroyed the long side equity sentiment in India. There is absolutely no stopping it. We have 3 rate cuts that have happened. There is a very strong majority to which Mr. Trump is coming in. But the dollar index now 109.5, and the US 10-year yield at multi-month highs. Where will this end?
A hard call to take, sir. Even I am not sure how it will end. I was not expecting this to come, but yeah, it has happened like that. And I think the uncertainty after every rate cut which the Fed comes in with, and some of the data, particularly the jobs data, etc., that's coming out of the US, is not giving you a clear-cut direction that inflation is on a lower trajectory or the economy is slowing down. Either ways, nothing is showing up very prominently. So for a central bank to be conservative, I think they are right on their path. But data has been very confusing, so it's hard for them to take a call. And since that confusion percolates into the bond deals also, so I think both the dollar and the bond deals have been very confusing. But I think what we should wait for is Trump coming into power. I think after that, most probably we have more clarity regarding interest rate directions, etc. And most probably, as I told you earlier, with the rentals and housing demand slowing down in US, most probably the inflation cooling off would also be visible to them. Real estate cooling off would be visible to them. And once that visibility starts to flow in over the next 2-3 months, I think the interest rate trajectory in the US would be very much clearer. And the over indebtedness also is something that is a problem which leads to more speculation. But rather than looking at too many moving parts, I think let's focus on inflation and as the one thing. And I think inflation would show some deceleration over the next 3 to 6 months, particularly on the rental and housing side. And once that starts happening, I think there is a high probability that even the Fed would be comfortable talking clearly about a lower interest rate trajectory. And Trump already has been speaking about it, so I think he will also go on board to talk about lower interest rates to spur growth, etc., on the manufacturing side. So I think interest rates are going lower. Inflation must remain lower over the next 3 months as more clarity emerges. I think probably we will see a better and clearer trajectory on particularly interest rates globally as well as in the domestic level.
Okay. Sharatji, what are your big expectations and big asks as an investor from the upcoming budget?
I think from my side, I've always been believing that consumption needs a push and capex needs a push. So the FMI will have a tough task, to balance it out. As I said earlier, I think this budget could have a lot of, a lot of things for us to look at. Uh, I think this time, most probably, they will try their level best to spur consumption as well as balance out the capex part of it. But I think around COVID, they missed out on the part where they did not really, they cut the tax rates, but it did not really help in terms of raising the animal spirits for private companies to go for capex. I think this time around with the tax cuts, etc., there is a louder call regarding tax cuts as corporate taxes are lower than individual taxes. I think there will be a louder call for taxes to come down on the individual side, and that should spur consumption a bit, though it is still negligible in terms of the number of people we pay taxes. But I think that should help. Some duty structures might get a rejig. Some things might be included into GST that have been pending for a lot. So I think fiscal consolidation would continue. My ask would be, what I would hope is that they strike a balance between properly spurring consumption as well as giving a fillip to capex, which I think has grown multifold. But I think going ahead they'll need more clarity on that. I think this time around, most probably you will see a lot of announcements around a lot of issues that may not have been touched upon over the last 4 5 years.
The battle now continues between 23,690 and 23,700 on the Nifty. The only thing that is going really well is the pharma space. Look at how Kaplan Point is making a fresh move beyond 2600. Yes, this is going to be a record high of sorts. You have 1.2%, 1.9% uptick. Jubilant Pharma, nothing stopping that, 190, 1.9% higher at 1044. JB Chemicals and Pharma in very fine shape, up 1.1% at 1916. And this is how at least the last 1 hour is panning out in the markets. Of course, tech is in fine shape. TCS trying to take out its intraday high. HCL Tech trying to regain past glory. 1934 we have 1.1% higher. And just a minute ago, Sharaji was mentioning Dabur. This is at 515, 1.1% higher. Multi-month lows is what we see on Dabur. Nothing happening for the last 7-8 months. And it's off substantially from its previous high of 616. That is what the markets are at this moment. Fairly active volumes today. Let's look at HDFC Bank, 1423 crores traded. SBI 1112 crores traded. Infosys 904 crores traded. Tata Motors 793 crores traded. Very modest gains, but it's Reliance that is just holding the market. Let me make an interesting observation here. What is the contribution by Reliance? Now 30 points. We have just 10 stocks on the Nifty which are in the green, but it's Reliance which is holding the fort for the index. Sharaji, Reliance at 1260. This is at a multi-month low, and of course substantially below its ex-bonus adjusted price of 1600. Is there value to be had in the stock?
Yeah, certainly. As I was telling you, telling Sakshi just a while back, I think this is a stock you should hold. I think hold or even buy. We are overweight on the counter. I think the fair value is 1650, 1700, and most of the things, the Geo listing, add some stabilization in the refining margins. And I think even a few weeks back, they announced that most probably the Russian oil sourcing long-term agreements have been signed again. And I think most of the businesses should do very well. Retail should also come down to do very well. So I think most of the businesses that Reliance is into should do very well. In addition, if the renewable part of the business, they can announce some concretized plans, that should provide another fillip to the valuation. Even without that fillip, I think 1650, 1700 is the fair value for the stock. And for a large cap stock, if you are getting that kind of appreciation over the next 1.5 year, I certainly think that one should invest in Reliance at these valuations.
All right, Mr. Avasthi, thank you so much for being with us on this show today to share with us all of those insights in the markets. Always a pleasure to host you. Here's hoping you have a great 2025, and when we meet you next, we hear from you more insights on the markets and the outlook going forward, and things to improve on the street as well. Thank you so much for being with us. Okay, viewers, we've entered the last half an hour of trade today and we have another top market guest joining in now. We have Mr. Avinash Korakshakar, the head of research at Profit Mart Securities, joining in with his view. Warm welcome to you, Avinash sir. Happy New Year to you. Hope you have a fantastic new year going forward for your loved ones and for your team members at large as well. It's always been a pleasure to host you on Business Today. And we hope in 2025 you come more often to share better insights with our viewers right there. Tell us, we are amidst this whole host of news flow. GDP data is indicating to a slower growth. Earnings again, there is a lot of nervousness whether there will be disappointment this time again after Q2. We have Donald Trump taking office soon on January 20th. There is nervousness and geopolitical tensions that are on the rise. And then we have the budget as well. How are you really looking to navigate so many moving parts in the markets over just the next 25 days odd?
Yeah, I think first of all, Happy New Year to you, Sakshi, and Shell, Happy New Year to you also. See, my guess is that there have been so many headwinds, now with Mr. Donald Trump expected to come in, there are expectations that a lot of tariff, kind of wars would start, and that would obviously mean that India is also going to face some, kind of headwinds. Typically, if you look at the bond yield in the US, it's reached all-time high. The dollar has appreciated, the rupee has depreciated to a record high. Now, I think, these are things which are definitely a little scary. And I think Q3 numbers, from what I understand, are not going to be all that very encouraging and aggressive. So, that is also one concern which the markets have got. And I think that is probably the reason why you're seeing a lot of selling. I think FIs continue to sell quite aggressively. Obviously, they are looking at the currency factor when they invest in India. So I think, the macro numbers have definitely got impacted. As you rightly said, the GDP numbers are down. Typically, even GST collections have been, slightly below expectations. But I think, here one needs to understand that some amount of, drawback in the markets, even if it does come through, investors should take a slightly longer term call. 2025 will be known and will be profitable for only those investors where moderation of expectations is not on a very high level. So I think, investors need to tone down their expectations. And I think one has to ride this difficult period with equal amount of optimism. So I think, sectors like real estate, capital goods, autos, typically domestic manufacturing sectors, construction, EPC, there's going to be a lot of growth in these sectors, plus the all-time favorite sectors like defense, railways. These are sectors which I think will definitely continue to do well. But yes, I think, this is a time where the market will consolidate on an index level. And on a stock specific level, I think you're going to see a lot of action now with the earnings season going to roll out. So I think it's better to focus on stock specific, activities, because that is where at least a better alpha can be created. So I think net, yes, the challenge is there. But I think investors need to stay invested in the market. This is not a time to completely exit and panic and completely exit the markets at this point of time.
Namaste Avinash-ji, a very warm welcome, Happy New Year. We seem to have started 2025 on the back foot as far as the Nifty and sentiment is concerned. Any fresh cash that you've deployed in the market over the last 15 days? Is there anything which has come into your buy zone, even though you might not have put in new money?
I think, as I mentioned earlier, Shell, we are very positive on cement as a sector. We believe that cement companies could do exceedingly well in the second half of this financial year. One is, of course, the pricing scenario has improved. Secondly, a volume uptick has already been seen. So I think cement is one sector where we are gradually building positions. And typically, on the discretionary consumption side, we are slightly contra bias. We believe that the government would announce some sort of soaps for the consumption to increase, and therefore we are quite positive on certain FMCG names. Although this sector is definitely not going to do very well in the third quarter, I think volume growth is been a challenge. But I think, there are some good quality names like Britannia, Marico. I was just listening to your earlier, discussion with the panelist Sharan. I think Dabur is also one company which has been beaten down quite badly. So I think, these are companies which enjoy a lot of strong brand pull. very strong product kind of bouquets. But at the end of the day, I think maybe if one takes a slightly medium-term call, then I think FMCG can be a good contra bet, because hopefully the government is going to realize how demand has come down, consumption needs to be boosted up. And if that initiative is taken by the government in the forthcoming budget, then FMCG could definitely kick off. And I think rural demand is also, slowly improving. So I think this could be a contra bet. But I think the bigger, kind of plus points would obviously come in from the cement sector. And yes, I think you can't ignore the defensive sectors like IT and pharma, which I think are going to play a very constructive and a defensive kind of role in the coming months and quarters.
Okay. Avinash sir, I was asking about the upcoming IT earnings and the expectations there from Sharad also. So I'd like to take your view as well. Tomorrow onwards, we start to get numbers coming in from TCS. How do you expect the entire IT sector earnings to come through, and where do you see outperformance and underperformance continuing here?
No, I think the large cap IT names would be the ones to watch out initially, because I believe that would give you a clear indication of what is the, kind of tailwind. But one thing is very clear, the third quarter, despite being a slightly softer quarter, because December is a slight softer month for IT companies, I think the commentary from most of these IT companies is going to be quite upbeat. They are sitting on reasonably good order books. The balance sheets are pretty robust. I think the clear indication of a good revival in the IT, sector, and specifically for Indian IT companies, could be known once Donald Trump takes over, because a lot of IT budgets have been, lying in the pipeline and they have not materialized. And this was very clearly evident from the commentaries of the larger IT companies at the end of the quarter too. So I think, clearly large IT companies like TCS, Infosys, HCL Tech, I'm pretty confident that numbers will be in line with expectations. But to get these stocks re-rated, I think you'll need a little bit robust, commentary from the management, which I think will be upbeat. But the real indicator would be after the March quarter, where I think management would be very hopeful that more business could come in, and business could definitely kick off in a big way, because markets are waiting for some clarity, from the new president as to how, businesses shape up. IT is not a sector which can be completely, taken out. India is a large dominant player in the US IT market, and I think that is going to continue in future also.
Avinash ji, what is your own personal call on the market till Jan 20th? See, what we have seen so far is a lot of rhetoric. Trump wants to take over Canada, take over Greenland, take over Panama, and of course, he has threatened a tariff war for anybody and everybody who exports to the US, and says that countries can't trade amongst themselves unless they do so with the dollar. Now, these are all wishful thoughts that are impacting market sentiment, and of course, we have excessive valuations in some parts of the market. Do you think beyond Jan 20th, Trump will deliver on what he has spoken so extensively, or we will have a quieter Trump post Jan 20th?
No, I think, Shail, what politicians talk during their election campaigns and what they actually do are two different things altogether. I think you are aware of this, and the same thing is going to get repeated. But I think clearly, I think what happens to Canada, what happens to Greenland, in fact, there have been some negative reports that, Trump is not liking wind energy. So wind energy companies in India could get impacted badly. See, my sense is that it's better to wait and watch for the final, commentary to come out from Mr. Donald Trump. But I think he is a very unpredictable person. And I think in the past also we have seen that, the markets have been very volatile. One day something comes on Twitter, the next day something else comes, and then day after something else comes. So I think the markets are now, going to be very, very volatile. I think we are going to see a lot of commentary coming out from him on a different set of issues. And that is something which I think we'll have to live with. So that is nothing to worry. I think the bigger issue is that what is his commentary on China? Anything negative on China indirectly means a kind of positive for India. And I don't think India in any way is going to be significantly impacted negatively. I think we do enjoy good trade relationships with the US, and specifically Donald Trump, enjoys a very good relationship with India. So I don't think we are going to see any major negative surprise. But yes, the markets are definitely going to be down played, at least for the time being, till the rupee doesn't stabilize. See, I think the rupee going up to these levels, the bond yields, the US bond yields at record high levels, clearly indicates that the FIs are in no mood to come and buy immediately. They probably would look at the budget. And I think if the budget does not present a very rosy picture or something remarkable in this budget, then I think buying is not going to come that easily. I think markets would also look at the fact that earnings growth is something which has been completely missing for the last 2 quarters. In the third quarter, there have been some expectations that festive demand, rural demand has been pretty good. So I think, at least not the entire market, but at least broadly, some sectors will do well. So I think if the numbers are slightly better than expectations, then I think you would see a good run-up rally. But otherwise, I think the markets are going to face the onslaught of FI selling. And despite record SIP numbers, unless and until the FIs don't come in shell, I don't think the markets are going to go anywhere. It's going to be a very sideway market, at least, till the end of, maybe till the nearing of the budget day, that is 1st of February.
Okay. Another space that we wanted to take your view, Avinash sir, is the pharma and the healthcare space. Again, pharma space, we do know it outperformed in 2024 with 40% returns. And again, this HMPV virus scare came in and how it dampened the sentiments on Monday. Healthcare space, hospitals, diagnostics, they are coming back in flavor again. Do you think there is enough and more steam even left for the new year if one starts in today in the pharma pack?
No, I think specifically if you talk about the pharma pack, I think the hospital space is one space where I think there's a lot of long-term value even yet to be made. The diagnostic business, according to me, is now more or less, market conditions have stabilized, but one cannot expect a runaway rally in these companies because, margins have come off. It's primarily a volume-driven business. I would say that hospital offers, much better kind of opportunities. And I think there are many companies like Fortis, Yatharth Hospitals, Apollo Hospitals. These are companies which have got large bed capacities and have got a good geographical reach. So I think, within the hospital space, if somebody were to take a slightly longer term view, the coming budget is also expected to give a kind of boost to the hospital chains. So this is one area where I think one can definitely give a second look on accumulating stocks, whenever there's a market correction, because I think long-term value is yet to be made. And I think there's a lot of headroom for growth for the hospital business in India over the next, say, couple of years.
The kind of record highs that we are seeing here regularly, look at Krishna Institute of Medical Sciences, even an erstwhile favorite, Indraprasth Medical, is now burst into fresh orbits. And of course, you have old world favorites like Apollo Hospitals. Max Health is doing amazingly well on the charts, and they've created a lot of wealth for investors who've held on to this space as well. What is also coming back, Avinashji, is NBFCs. Last 12 months have been terrible ever since RBI clamped down on rising unsecured loans. And you see the movement today on Credit Access Grameen, Spandana Spurti, Fusion Finance. I think Fusion was the one which blew out its entire balance sheet about 2 quarters back. You have Samman Capital doing a lot of good in the market. What would be your favorite space in this one, and how do you explain this rise?
No, I think it's too early to give it a shot that everything seems to be okay, because microfinance business, according to me, Shell is yet going through a painful process. My sense is maybe the December quarter also, you may not see a very good recovery in the numbers. But yes, after March, hopefully this industry will stabilize. Microfinance business had been hit significantly. And as you rightly said, Fusion Finance, Fusion Micro, had actually dented their balance sheet very badly. And I think a lot of institutional investors actually resorted to selling in this counter. So my sense is that, especially the microfinance space is something which will still be a little cautious. Let the December numbers come in, the commentary of the managements come out. It still remains to be seen whether demand has actually grown. And I think the balance sheets have been repaired, because a lot of asset quality has come under pressure. I think the good kind of places to park your money would be possibly, the housing finance companies. I believe that, hopefully if a rate cut happens, maybe not now, but at least over the next, say, 3 to 6 months, housing finance is one area where I think a lot of latent demand continues to exist. And I think you got a good bunch of private as well as public sector, companies operating here with asset qualities well under control, deposits growing, disbursements growing. So as you said rightly, Sanman Capital, the earlier India Bulls housing stock, after a lot of consolidation has started moving up. I think despite having BlackRock as a key shareholder, the stock did not move for a long time. So I think, this could be a very good contra bet. But yes, again, for high risk investors, because compared to the SDFCs of the world, here the balance sheet quality is obviously is obviously has to be seen in light with the aggressive management compared to SDFC. But I think there are other defensive bets like an LIC housing. Typically, I mean, if one were to take a call on LIC housing, they have a fairly large, kind of book size, a good asset quality, a good mix of retail as well as, corporate kind of customers. So I think clearly one has to pick and choose. But I think housing finance could be a good opportunity where I believe, the risk reward could be much favorable compared to the normal NBFCs. In the NBFC space, I believe there's a lot of competition shale, which I think is going to have some impact on their margins in the coming quarters.
Okay. Avinash sir, also wanted to understand from you, how would you look at this new age tech space for the new year now? Zomato, Swiggy, now we have newer entrants like MobiKwik that's entered the fintech space as well. Anything looking interesting to you that could continue? Zomato, there has been some concern from some brokerage houses saying that the competition is rising, and therefore we've actually seen some consolidation play out over the last few days. The stock is back at 250 odd levels. What's your own understanding here, sir?
No, I think within the new age internet companies, I think, players like Zomato, Swiggy, for that reason, MobiKwik, I think these are going to be companies which are going to grow exponentially. See, because, frankly, in urban cities, urban metros, even in tier one, tier two markets, the habit of ordering online food has now caught on in a very big way. And I don't think, the entire market has been captured by these companies. So there's a lot of headroom for growth left. Of course, if you take an investment call in a company like Zomato or Swiggy, I think you got to take at least the next 2 to 3 years in mind, because these are all companies which are yet losing cash. They're not generating any cash flow. But I said, in terms of the competition, in terms of their geographical reach and market positioning, I think they've got a unique positioning. There are very few players who can actually compete with Zomato and Swiggy. There's very little dominance from any other large players, and that is probably the reason, this business will continue to thrive. But yes, I think you need to take a 2 to 3 year call. And as far as MobiKwik is concerned, it's already a profitable enterprise. The payment business is a very large opportunity, although it's a very wafer thin margin business. My sense is that MobiKwik will report its first quarterly numbers once it gets after its listing. And I think the market should be clearly looking at all clear data points, because obviously if the company delivers, then I think, they're going to see a good amount of re-rating happening. Already the stock has given a stellar return. The public issue price was about 280. We are seeing levels of almost 600 plus. So I think markets would definitely give it a big thumbs up if the numbers come much better than expectation. And I think it looks like, because I think all the metrics during the public issue time, the management was also pretty confident that they would deliver. So I think it's better to wait and watch. But mood in the market is that these kind of companies would continue to thrive and grow.
Okay. Right.
Coming back into action is PTCIL. This is PTC Industries Limited. Again, I repeat, for those with a little bit of, those who can do a little bit of effort, please look it into the most recent preferential that this company had done. Some changes happening in its defense portfolio over the last 3 days. There has been a substantial rise in volume. Let's take Avinash's view. Avinash, do you track PTC Industries Limited?
Yeah, I think Shell, it's a defense based company and has a very large order book. And as you rightly said,
Yes.
a lot of marquee names have entered this stock. In fact, we've got the names like Ashish Kacholia also, who's entered into this company. My sense is that, despite the fact that the stock has risen significantly, they have an order book which is at least, over the next,
Yes.
say, 2 to 3 years. And very niche business, very competitive business, and very difficult areas where none of the public sector, defense companies have come. So I think, the most important mode for the company is technology. And I think the company is obviously very strong on that parameter. I think numbers apart, if you just look at the valuations, you may feel that the stock looks overpriced. But over the next, say, 2 to 3 years, this company is definitely poised to grow quite significantly. So I think, again, from a longer term perspective, somebody wants to add it to their portfolio, even at these levels, I think needs to obviously look at any market correction because it's not a cheap share. So obviously, entering into this stock always makes a sense to buy whenever the market corrects. But liquidity in this counter still remains to be little thin, and that's the reason the volumes are not very large. So I would believe that yes, it's a buy on decline, but yes, from a 2 to 3 year kind of time frame.
Yes. Just a point of caution I'd like to introduce, which of course Avinash has marked very well. The price to book on this one is 18, very, very expensive. And the PE that we have is 535. So you have to be extremely, extremely cautious on this one. But it's an extremely profitable company on a revenue of 247 crores. The earnings, net earnings are 45 crore rupees. So it's a 20% NPM is what I'm talking to. And at this level, which is almost 17,400, the market capitalization is 24,000 crore rupees. So adequate caution needs to be exercised on PTC Industries Limited, but price is priced right there in front of you and it's doing well. And in terms of price, even Concord Bio is now 4.9% higher, 2279. Sakshi.
Okay, got that. 5 minutes to go before we wind up today's trade as well. What else is ticking is the oil and gas space, which has been hovering about 1.5% higher in trade. Then in the broader markets also, there are some interesting names. We'll mark out some of them. There is Mukta Arts that continues to be in the sharp buzz, 5% higher. You have Shopper Stop out of the blue, 5.5% higher. Ashiana Housing, Pokarna. Then you have Man Industries that's up 7%. You have Fusion Finance that's been buzzing. Ashapura Mindchem is buzzing in trade today. Suven Life Sciences is another one. Z Learn. So I think Z Group is actually showing us some traction in trade today. What else? Some of these stocks, TGB Banquets and Hotels, that's also up and about 12%. Okay, so let's. That's also interesting. Avinash sir, is tourism hospitality space looking interesting to you? I remember once in 2024 you had marked out even Wonderla Holidays as one of your expected stocks where you were positive on. Anything else that you've added to your radar?
Yeah, I think see, apart from Wonderla, I think the local competitor in the in the market in Mumbai Pune region is Imagica. I think Imagica also should do well. Typically, these are B2C business components, and despite the virus scare a couple of days back, I think it's business back to usual. The October to December period is supposed to be a fairly remunerative period for the company, and I think typically once the monsoons are over, you see a good amount of traction in the footfalls here. So I think, hospitality business, I would believe, is going to show a robust performance in the Q3 number. This definitely is the peak quarter for them. So I think, large hotels like Indian Hotels, Chalet Hotels, typically even even Park Hotels has shown some uptick today after being stagnant for a long time. So I think, hotels are definitely running on full capacity. The ARRs have also improved. So my sense is that, this could be a very kind of a promising sector even for the next 6 to 12 months, considering that, supply crunch still continues. And I think the bigger metros, the tier 2 markets, everywhere, it's very difficult to get hotel rooms at short notices, and specifically during the October to March period. So I think it's better, if one were to remain invested here. And I think obviously on any decline, a stock like Indian Hotels still continues to be our favorite. We believe that the geographical reach and the kind of bargaining power it enjoys with customers, I think offers a very good risk reward even at the current levels. I think one needs to obviously give in some more time here, but yes, this could be a good portfolio pick even at the current levels.
Okay, got that.
Right, 327, ladies and gentlemen. Just a small aside, Sakshi. The city of New York has more 5-star hotel rooms than the entire Indian landscape, and that possibly shows you how small our industry is and where it can go, or it shows you how big New York is, depending upon which side of the equation you are on. 328. This is a time to mark two important stocks. One is Ashiana Housing. This is again a Noida NCR based builder constructor, and the other is Anantraj Industries. Both of these are Delhi based builders. Both of them have shown a record high in trade today, and there is a huge spurt in volume as far as both these counters are concerned. Apart from that, the NBFC space has shown very brightly, and the Nifty has recovered sharply from intraday lows. It falls below 23,700, so absolutely no sign of any hope. It's a cut by, it's a bleeding by about 1,000 cuts. So every day you will see a loss of 20, 100, 150 points. It will consecutively test intraday lows and then fall below them. Apart from these two spaces, you have outperformance in many pharma companies led by Concord Bio today, 2273, 4.5% higher, and of course a very strong show coming into several IT companies. Sakshi.
Okay, Avinash sir, we will thank you on that note for being with us here today on the show to share with us various insights that you have done, and hoping for seeing you more often on the channel and on the show as well going forward. Thank you so much for being with us. Well, a muted set of trade today. We close 0.1% lower, definitely off the lowest point. So that's a bit of a heartening fact that we can look at. We are now managing to inch closer to that 23,700, if not already reaching that, after having dipped to nearly close to 23,500 on the Nifty. 49,832 is the current level on the Nifty Bank. It's frozen at 369 points lower, 0.7% of a cut. Barring the oil and gas sector that was continuing to soar higher, 1.4% uptick. IT that managed about a 0.5% gains, and FMCG that also pulled up about 0.5%. Rest all of the sectors pulled down, with small caps down by 1.7%. Sharp declines on the small caps, mid caps down by 1.1% as well. Top movers ONGC, ITC, Asian Paints and Dr. Reddy's, whereas on the downside we had stocks like Apollo Hospitals, Trent, Ultratech Cement, Bajaj Auto and Adani Ports as those which were the top drags today. We leave you at that, viewers, but do stay tuned. There's enough and more to be caught on the action on the other side, even after the market hours on Business Today television. So stay tuned.
The Chief Minister House in Delhi has become a big flashpoint this poll season. While the BJP has accused Arvind Kejriwal of building a Sheesh Mahal, the AAP is now demanding proof.